John Burnside of Freeboard Capital is here to help us get through the trading day and our trader rundown. And good to have you on the show, John.
Thanks for having me.
The biggest issue today is it's a triple witching options expiration day. So what will this mean to the market, John?
Well, there's going to be huge volume. I mean, there's absolutely insane volume going to be going on. Even the regulators don't want to have any news come out on Triple Witch because it can influence the market so much. So actually the actual news won't be too much, but the volume will be absolutely insane. Usually the June expiration is the heaviest volume day of the entire year.
Good to know. And what are traders thinking about the overall market? What's the feeling from the trading floor about the whippy market we've seen?
Well, it's kind of funny you bring that up. I was playing in my golf league this week, and we were even commenting last week about how the market went straight up. And then last night we were talking about how it went straight down. And it's kind of funny. It's like it's such a manic move. Everybody has to get in, everybody has to get out. And that's, there's usually ebb and flow. And in this market, it doesn't seem to be the case. It's all one way. Either everybody's got to own stocks or they all got to sell them.
So as a professional trader, you are sticking with some individual stock plays. One name that you happen to be trading is GE, popular stock. What do you see happening here? Are traders feeling like they need to have exposure to the upside on this stock or the downside on GE?
Well, we've talked about my positions and the stocks that I like. I like getting dividends. GE paid a dividend on Thursday. They went ex-dividend. So because we own the stock, we received that dividend. I also own the 29 puts because I guess I'm still scarred from being here in '87. So I always want to have
protection,
yeah,
just in case.
Just in case.
In place.
Yeah, so I have the December 29 puts against my stock that I'm long. And but I have not sold all of my calls. I had to roll my calls from this week's 30 line, next week's 30 line to next week's 30.5 line because the stock had rallied and I didn't want to lose the stock and not get my dividends.
You just want to have exposure in case GE breaks out because that 30 line has been very critical to traders.
You're exactly right. So I'm not short all the calls that I'm long stock. So
okay.
I just want to have a little bit more upside exposure. So that's exactly right.
Also on your list, Cisco Systems. What do you see happening there? Breakout or breakdown for the stock ahead, John? What do you think?
Well, again, it pays a nice dividend. They just raised their dividend this year, and we own the stock, but we own the July 27 puts along with that. We were short the 29 calls for this week, and Goldman downgraded it on Wednesday, so we were actually able to buy those calls back for 3 cents. And then I sold only half of my position for next week in the 28.5 line. I give myself another chance if it goes back up.
I hope you get the trade right, John. Thank you for coming on the show.
You betcha.